Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look on the euro currency again. So you can see the situation here stands sophisticated, so not very simple and tricky. Market side by side is forming a few grabbers on the bearish side and suggesting the drop below the recent lows, which, as we said, actually the last outpost for the bulls, because if market will break these lows around 1775, it open road to the previous bottom around 106.50, and we suggest that probably could be the real downside continuation. Well, everything was relatively stable and quiet till recent few sessions. And we talked a lot about the relation to the stock market, and indeed this relation has worked initially. I mean, Monday, also we have mentioned it on Friday, and indeed the DAX index starts dropping. And euro currency has shown the first upside direction. But day by day, we've got the new driving factor, guys, that is not expected. And this really unique driving factor. So as you know, this was some court decision in Germany that put under question the participation of the Germany in the policy of the quantitative easing from the European Central Bank. And well, the court decision suggests in two words that Germany should either limit this stake in these measures that European Central Bank intends to apply to support the economy of the European Union, or even should not take the part in this program. That in turn has led to well, a lot of noise in the mass media, in the news, and European Central Bank and in Brussels tells that it could put the sanctions on the Germany. Guys, it seems that the people, they're blinded by the power and some, I don't know what else, just losing the touch with the reality. Because the Germany is European Union mostly. I mean, economy, power, and all the stuff stands around it. So this is the core European Union economy, and to put the sanctions on the major economy is just like the cutting the branch that you're sitting on, well, this is splitting inside the kingdom, and that's really could put the European Union under the hazard of the well, dropping in just in the pieces. So that's probably the nuance that investors start to treat seriously. And I suggest that the recent drop and the recent inability of the euro to proceed higher mostly has relation to this new political menace that stands right now in the European Union. That's a really serious problem, guys. So it's really a big question whether this turmoil could lead us and to lead the European Union. Probably they will find some consensus, but the precedent itself, well, it looks dangerous. So, especially on the background of the Macron words that he said that if European Central Bank will not find the acceptable decision on the supportive measures on the economy, it really could lead to the splitting of the European Union, destruction of the European Union, just because each country will have to worry and carry on its own problems by the sources that they have. So, on this new light of these problems, the perspective of the euro not looks as cloudless as it was looking just a few days ago. And currently, guys, we should probably hold aside from taking any new longs. So if you have taken the long position now, they are standing there covered by the break-even stop order, so you could do nothing. But probably currently, taking into consideration what's going on right now, it's better to not take the new long positions on the euro. That in turn gives more advantage right now to the bears, And as this is not just single grabber has appeared, but market forms grabber day by day, probably you could try to consider, if you have the bearish view and you would like to, well, trying to take this bet, consider the possible taking the short position against the grabber's top. Because this story that involves these patterns and in general with this price action, all the story stands about this political tension that stands around Germany and European Central Bank. And if they will be resolved positively, euro probably could rise and you will see upward continuation. So I think that if it will not be resolved and we will get some negative continuation, then the euro will drop. From that standpoint, this level is well, very suitable for trying to bet on particular this event. So if you'd like to trade particular this event that now stands in the European Union, well, that's acceptable scenario. On the 4-hour time frame chart, from the technical point of view, it's also bad sign. As you can see, our major trend has not been broken yet, but take a look. Market can't get the bounce up from the bottom of the right arm, and that's very bad sign for the hand shoulders pattern. Second, we've got the reversal candle here, suggests the downward continuation, and in general, the consolidation at the trend line, inability of the market to jump higher up from the trend line, consolidation at just laying upon the trend line. This is a bearish sign. So this is not good. Finally, on the hourly chart, well, you could see what's going on. Upward action rally up from our OP, and this catalyst 2.2 buy was perfect, but it was not able to break this trend line first. Pull back just to rally again, as we said. Watch for 108.25. Some ABCD pattern is completed. Trying to buy here. It's again good rally, but market was not able to pass through this resistance again and collapsed. So it definitely exists some barrier. Definitely all the buying opportunities are covered by the sellers, and it's using some pullback for taking the short position. It means that situation on the euro and political sphere, fundamental sphere stands serious, and it's not occasionally the market because it can't follow to the stock market. So I think that the current circumstances is that it's better to stay aside from any bullish positions, and well, maybe you could consider taking the shorts.